So I don't think these central bank digital currencies or anything like that, they're just not going to work, right? The U.S. government struggles to build a website. How the hell is it going to build CBDC?
You use Bitcoin to fund it, you use AI to think through the design, and then you use robotics to build it.
So what does that mean? The cost of energy then asymptotically approaches zero?
Right. I think this has been a bit of a wake-up call to policymakers at the local, state, and federal level to really adapt and then surpass Chinese energy production. It's not going to happen overnight.
If you're looking at the founding ethos of the United States, I think Bitcoin might be the most American technology there has ever been. Can Bitcoin help save America or revivify it in some way? Matt, good to see you.
Good to see you as well.
Thank you so much for joining me here in the studio. It's been a long time coming. I think we've been working on this for about a month.
Yeah.
Excited to talk to you. I know we had a really good call before deciding to do this. And so I'm hoping we can capture some of those fireworks today too.
Definitely.
Let's start with a very broad question. I think this is important for people that don't understand Bitcoin. You know, Bitcoin mining, obviously it's a metaphor. There's not actually people out there with picks and shovels. It's one of the most important parts of Bitcoin, if not the most important part. It's where the rubber meets the road, so to speak. But describing it to someone who's a no-coiner is very confusing. So like, how do you approach this topic with someone who is completely unfamiliar with Bitcoin and Bitcoin mining?
So Bitcoin mining, you can really think of as the headline is we turn energy into currency, right? Now, avoiding the concept of what kind of currency it is, I'm sure we'll get to that. I think what's really interesting about mining is that we act as somewhat of the guardians of the Bitcoin network, right? So this is a $2 trillion plus asset class. It's owned by tens of millions of Americans. The job of the miners is to keep track of who owns what and secure that knowledge, right? So there, as we know, there's a ledger. It's decentralized. And the miners are out there competing to ensure the sanctity of this ledger across the world using energy as the primary input.
Yeah, I think that's a great way to put it. So obviously there's a lot of influence on the energy sector. And so why mining? Why do people use the metaphor of mining? Is this related somehow to gold mining, or like why that metaphor?
That's a great question. So mining is one of those earlier terms from the Bitcoin days. Now, linguistically, it's not always called mining. Sometimes the Chinese call it farming, which maybe would have given us a warmer welcome in some quarters of the US. But mining is the name. And I think there's a bit of an homage there to gold, right? Which is when I call it the original Bitcoin, or Bitcoin is the digital gold, right? And you can almost think of a Bitcoin mine as a perfectly economically competitive mining operation, right? Where we are using the inputs to accumulate as much Bitcoin as possible, and we are rewarded commensurately to the amount of Bitcoin that we produce, right? So to give an example, you can think of us almost as running the accounting software for the Bitcoin network. Obviously, there's other components like the nodes involved and things like that. But one analogy that I've found quite helpful for folks is to really describe us as having an army of accountants, right? Maybe even AI accountants these days, right? Where these accountants are paid for with electricity, and their job is to really tally up the debits and the credits and secure that knowledge. And again, there are other players in the ecosystem, but at the end of the day, if you've got the mining hardware, you're an integral part of this operation.
Yeah, I think that's a good framing for it, because this is what makes Bitcoin so incorruptible, is that you have all of this army of robotic accountants checking one another's work.
Correct.
And so therefore it's impossible basically to get fraud or deception or malfeasance through that system, because all the accountants are checking one another's work. What about the energy component though? Like you said, it's like an homage to gold mining. So is there a relation to what the energy expenditure to gold mining did to what the energy expenditure does in Bitcoin mining?
I think that's interesting. So in some ways it's separate, and in some ways it's very similar, right? So you can think of mining as having at its core two inputs. One are the machines, right? So we're using special computers that are really geared towards only the Bitcoin mining algorithm. So these are not NVIDIA GPUs that you can switch to play video games or run AI components. They really only run this Bitcoin code. So those miners are component one, and then the megawatts are component two. And so to give a sense of scale, a megawatt is about as much energy as 600 to 800 houses in the United States use in a given year. Right? And mining is now at an industrial scale where we are using the megawatts, and frankly, we're approaching the gigawatt level for the energy inputs. And so as you think about the analogy to gold, we basically run the math on what will it cost us to secure those machines, the miners as we call them, and what will it cost us to secure those megawatts. And when we combine those two, are we accruing more Bitcoin than that cost? Now, what's interesting is that in gold, obviously as the price of gold goes up, old gold mines can open, or they can go survey more land and find more gold mines, right? Or at a certain level, you could even pull gold out of seawater, right? So if there were incentives, the outcome would be more supply.
Yeah.
Bitcoin is unique. It doesn't have that, right? Right now, there are 450 Bitcoin that are being released per day. It's on an emission schedule. It's very transparent. Every 4 years, that number cuts in half, right? So we're at 450 per day. A few years ago, we were at 900. We're going to slowly ramp down in the emissions. This is called the block subsidy until about the year 2140. But the interesting thing is the miners you could have 10 times as many miners on the network, but there's not going to be 10 times more Bitcoin, right? It is a scarce and provable asset.
Yeah, that's a big deal that I don't think many people fully absorb, is that all of that increase in Bitcoin's price, like as you said, when the gold price goes up, other means of mining gold become economically viable.
Correct.
Right. But so then you can increase the supply flow to the market to put downward pressure on the price.
Right.
But you don't get that with Bitcoin.
You do not.
Right? It's like no matter what Bitcoin price goes to, it's not much energy comes online, new capital expenditure, the two pillars that you described. It's not going to accelerate the Bitcoin supply issuance.
Correct.
So that all of that additional, that's what creates the feedback loop, right? Is that sort of that fixed curve.
It does.
And so, why is that so mind-bending? I mean, it's just something we've never had before, right?
I think that's exactly right. So whether in the digital or physical world, you've really never had a commodity that is truly fixed. Now, you've got, for forms of priceless artwork, you've got one of ones, things like that.
Yeah.
But nothing that could really function that is both scarce and a currency, right? And so Bitcoin has some of the key distinctive factors that make it useful for transacting, right?
Yeah.
So it's a store of value. It's available worldwide. You could argue that the Mona Lisa also has a finite supply, right?
Sure.
It's a little hard to pay for coffee with the Mona Lisa.
Yes.
Right? And so with Bitcoin, you've got a fungible good, right? It's interchangeable. Your Bitcoin and my Bitcoin are effectively equally transactable, right? And so suddenly you've got something with perfect scarcity that can compete with currency. And that's where things get really interesting.
Yeah. I mean, so maybe another way to say that is every additional unit of demand for Bitcoin has to be expressed fully through its price because it cannot be expressed at all through new supply flow, basically.
Correct.
And so you get this disproportionate impact on price from any increase in demand.
Right. And so let's actually talk about what's happening with that this year, right? So we've seen the emergence of ETFs and now Bitcoin treasury companies. So American Bitcoin is an accumulator. And why I say accumulator, not a treasury company, is our mandate is to accumulate as much Bitcoin as possible through any means we can do to get Satoshis, right? The pieces of Bitcoin. So obviously we can run the treasury playbook, something Michael Saylor has pioneered and some others in the field. But we also have a pretty top-notch mining operation, right? So we're getting a piece of that new Bitcoin that's coming out on that schedule, as well as buying it from the market. And doing so blends down our price. But one of the other things that's come out this year in a big way are the ETFs, right? And when the ETFs start to buy supply, well, they have to buy it from someone. And, only double-digit percentage or less than half of the coins are even really saleable. Satoshi owns quite a few coins. The founder of Bitcoin, or the creator of Bitcoin, he owns anonymously a huge amount of the supply. The ancient coins, which are coins that have not moved in years, they're largely not moving. And so suddenly you have a lot of demand for something, and there's not a lot of new supply coming on the market. Again, the only new supply of Bitcoin is that 450 coins per day.
And what does it look like right now with the net buying per day? It's well in excess of that new issuance.
That's getting fascinating. The latest number I saw estimated that we would see about $200 billion of capital inflow into Bitcoin this year, right? Now, that's a mixture of retail and increasingly institutional adoption, right? And that institutional dial turn is going to really set the market alight, right? Next year, we estimate it could be up to $350 billion. So if you're putting $350 billion of fiat into a $2 trillion asset where they can't make any more, the effect on the price is pretty compelling.
That's a lot. So are there any numbers around the actual number of Bitcoin being purchased per day in a world where we're only mining 450 Bitcoin per day?
Yeah, that's interesting. You check the capital flows, and I believe it's largely most days in excess of that. Of course, you're somewhat at the whims of global macro, so I can't attest that every day supplies or demand is greater than the market supply.
Yeah.
But yeah, mining is no longer, while mining is critical to the network, mining is no longer the main source of supply of coins. Now, it's the only source of supply of new coins, right? Mm-hmm. But with every halving, and this was a very smart move by the creator of Bitcoin, the role of the miners as an inflationary player has been decreasing, right? And increasingly, Bitcoin is moving into a price discovery mode that has impacts far beyond just the miners.
So you think we would be moving away from a 4-year price cycle then as Bitcoin matures?
I do. I think the 4-year price cycle, which has been very helpful, right? These halvings that are taking place right on schedule, it was a good way to read Bitcoin capital flows initially. Mm-hmm. But again, every 4 years, that daily impact or that daily inflation is no longer quite the drop of supply in the market that it used to be, right? I think the 4-year cycle has been blunted. And there's a few forces that have done this. I think one is the drop in minor emissions, which we're obviously seeing every 4 years. The second is that the emergence of sticky capital, right? Institutions that are really buying and holding. Bitcoin as an asset inspires long-termism. Mm-hmm. There are folks that trade it, but I think philosophically, a lot of people that come into Bitcoin realize that they really don't want to give it up, right? They as I think about American Bitcoin, sometimes I don't view it as we're buying Bitcoin. I view it as we're selling fiat, right? And so I think that's a philosophy that extends far beyond just American Bitcoin. I think a lot of people coming to the market are realizing, hey, I've got, I can have my assets in the hardest currency in the world, and I can have my liabilities in fiat. Mm-hmm. That's a trade I should make, right? Yeah. And so that sort of behavior further makes the Bitcoin supply stickier with folks that are doing it. So to give examples, there are now endowments that are buying Bitcoin. Mm-hmm. Endowments are generally not day traders, right? They're buying and holding. They buy things like timber. They buy stakes of companies that they are patiently holding. And I really believe that institutional adoption is what's going to take us into the next chapter of Bitcoin.
Mm. Yeah. So Bitcoin miners obviously are probably one of the number one cohorts that sell Bitcoin, like number one natural seller. Yeah. But I guess you would also assume that they are, you already said you guys don't sell, right? So you're
Correct.
mining, but you're not selling. So is that cohort transitioning into long-term holders as well as Bitcoin matures? Like what does that look like?
I agree. I think that the market has signaled that hodling is the move, right? I think for American Bitcoin, again, as an accumulator, I view the mining as a way to accumulate Bitcoin at a structural discount. I've no desire to sell. Just like I would much rather mine than buy, I just can't mine fast enough because, again, there's no way to mine faster. You can mine more, but you can't mine faster, right? I think that a lot of the miners are similarly realizing, wait a sec, we shouldn't be selling this. Now, you do need to fund your energy bills and things like that. Yeah. But for a company like us that takes on this more treasury approach, I would much rather find ways to raise dollars and then use the dollars to pay the energy bill and keep the Bitcoin than sell the hard asset that I've earned.
Got it. So that is the strategy you're seeing Bitcoin miners shift toward then is to
an extent, but I think doing this successfully requires a special kind of miner. I think that historically there have been a lot of miners that have really struggled to actually keep their cost per coin reasonable. I think you've seen a lot of growth in SG&A. I think in boom times, you've seen folks start to overpay for megawatts, overpay for machines, and then realize, holy moly, we're not going to make it, right? Or we're not going to justify this. And in fact, we should have just bought Bitcoin to begin with, right? And so for us at American Bitcoin, we launched operations April 1 of this year, 2025. And for us, we wanted a company that out of the box would be accumulating Bitcoin at a structural discount. Otherwise, I would just go by spot with everyone else.
So how do you guys actively implement that strategy then? You are monitoring your cost to produce a Bitcoin. Yes. And if you just don't get out over your skis ever.
That is correct. So ruthless focus on operational efficiency, right? So, we'll shortly be a publicly traded company. And to be that successfully, my attitude is you have to run this business with the simplicity of a lemonade stand. You don't want to get out over your skis. We know that our primary cost is energy. Energy is almost our entire cost. And on top of that, we have a partnership with our sibling company, Hut 8. That's our infrastructure provider. But we've made sure that a lot of our operational costs sit inside of Hut 8, right? So we've got our all-in cost of electricity. It's in the tens of thousands, low to mid tens of thousands, right? We've got our operating obligations and our full-time employees, et cetera, are mostly sitting inside of Hut 8. And on the American Bitcoin side, you really don't need that many people. Again, the only thing that I want to be buying is machines. We don't even buy energy, right? Or we don't even pay for energy infrastructure directly, because as I looked across how do I get as much Bitcoin as possible? I don't want to put money into a substation. I want to put money into getting these computers, right? Those AI accountants we discussed, who are going to go get me Bitcoin at a discount.
Got it. So then you guys obviously are making strategic use of debt then to cover your operational expenditures. How do you manage that? Because that's where I assume Bitcoin miners can get into hot water.
That's an excellent question. So debt and equity, right? And so this is where I think Saylor has been very innovative, right? When he talks about mNAV, the multiple to the net asset value of the Bitcoin on the balance sheet. I think if you can fund growth with us, right? And we can sell shares into the open market, and those shares are giving you a piece of ownership in our operations, which are accumulating Bitcoin at a structural discount. That's a good move, right? And what I mean by that is that we want to grow Bitcoin per share. Bitcoin is not like Solana or like Ethereum, where they're staking and there are ways to just accumulate Bitcoin without any work, right? In Bitcoin, the only native way to accumulate Bitcoin is with mining, right? And so for us, as we go out into the market and we're competing with other miners and other treasury companies, what I want to make very clear to our investors is that my primary responsibility is to increase the amount of Bitcoin you have per share. Otherwise, you should go buy an ETF, right?
It doesn't make sense. It doesn't make sense.
It doesn't make sense. It doesn't make sense.
If you're anything like me, you understand that Bitcoin is something we can use every day to connect, to collaborate, and to build stronger, freer communities. As true Bitcoiners, you all know we are each responsible for onboarding more Bitcoiners. That's why I chose to partner with Cowbolt, an expense splitting app that settles in Bitcoin. It can be as simple as splitting a dinner bill. Your friend covers dinner and you reimburse them, but you send it back to him in Bitcoin. Now your friend has their first sats. And as I always say, where your money goes, the mind follows. By using Cowbolt to get Bitcoin into the hands of your friends and family, you can help us orange pill the world. Cowbolt is built to let you split costs, share expenses, and settle instantly, while always keeping full control of your keys. Cowbolt is simple, social, non-custodial, exactly how Bitcoin was meant to be used. If you're serious about Bitcoin, it's time to act like it. Download Cowbolt today on iOS or Android. To learn more, go to cowbolt.com. Again, that's Cowbolt, COWBOLT.com. Forget multivitamins and other supplements. Animal organs are the most nutrient-dense foods on the planet. You can get 100 times more nutrients from organs than you can from muscle meats. But the problem with eating organs is that they are difficult to find in stores, they are difficult to prepare, and even when they are prepared well, they often don't taste great. Thankfully, Heart and Soil Supplements has made consuming organ meats so much easier by providing powderized organs in capsule form. Organ meats include everything your body needs to thrive: vitamins, minerals, peptides, proteins, and growth factors. This is why organ meats were the most prized foods for our ancestors. Fortunately for us, Heart and Soil makes these treasured foods easily accessible. So go to heartandsoil.co today and use discount code BREEDLOVE to get started on your journey to optimal health and vitality. Again, that's heartandsoil.co, discount code BREEDLOVE. There's a lot of companies that want to do this as well, right?
Yeah.
They want to optimize for mNAV.
Sure.
They don't want to sell Bitcoin, so they need to make use of debt and equity to try and augment all of that. Are there certain metrics, like strategic proxies you're using to, instruments you're using to drive the ship, so to speak? Or if any of this is proprietary, feel free to ignore the question. But just wanting to talk broadly about how companies navigate this.
Right. Maybe you've excellent question. You've probably seen, the olden days, the old ship interfaces of some massive cruise liner that had 30 dials on it, or maybe like a hobby airplane, right? That has a ton of analog dials.
Yeah.
It's a bit like that, right? So we've got a few key metrics. mNAV is our best treasury metric. Cost per coin is our best mining metric, right? So there's things that go into that. There's hash cost, hash price, network difficulty. There's lots of things that drive up, and they have their own dial that drive up into these figures. But at the end of the day, it's going to come down to Did I produce Bitcoin for less than the market price?
Sure.
And am I getting rewarded in the markets with a premium to just the net asset value of the Bitcoin?
Yeah.
So you've mentioned that there are a lot of companies coming, both in Bitcoin and overall. So we've seen the emergence of what they call the digital asset treasury, the DAT, the DAT. For Bitcoin, I really understand it. I think that for Bitcoin, having a treasury company where you are committing to your shareholders and to the market that you are going to find ways to accumulate the hardest asset in the world, it makes a ton of sense. Where I've started to really see American Bitcoin differentiate is that I have a means outside of just the paper to accumulate Bitcoin, right? At the end of the day, we're not an ETF, we're not a fund, we're an operating business. And so I have operational concerns that I'm really putting time and effort into in order to find ways to accumulate something we have no intention of selling. Right. So as you think about these 10 other treasury companies, they might have a very compelling story to the market that enables them to secure equity at a cheap financing rate or debt or things like that. But at the end of the day, they're almost certainly just buying spot because, again, there's not really another way to make Bitcoin, right, aside from mining or buying spot. Well, we're in luck because we can do the mining.
Yeah, it definitely seems like a great business to be in, but you do have to be ruthlessly capitalistic to survive.
It's honestly, this is as I think back to business school, this looks like something out of an economics textbook, right? Where you're fighting on this production curve, and the lowest cost per coin wins.
Yes,
right. As you think about mining, there's a law of cycles here. Now, it may not be a 4-year cycle, but boom and bust cycles are attendant to any industry, especially something that's commoditized. And so for us, I think even in the bull markets, we are always thoughtful about avoiding euphoria, right? And so to give you an example, a few years ago, there was a very large crypto conference, right? My company at the time, same partners as today, we were operating under the name US Bitcoin Corp, right? We were not on the stage. There were 4 fantastic executives on the stage, each giving out very high targets for exahash, what they were going to achieve, and by when. It was interesting because it was like watching Olympians on the podium, right? And it was in that moment that I decided I don't necessarily want to win gold. I want to win bronze every year. Because the gold medalist kept changing, right? You were incentivized to blow up. You were incentivized to over-lever. I have no interest in that. I'm building for the long term.
I see. So survivability is the name of the game,
Correct.
Obviously, when things are ruthlessly capitalistic.
Correct.
I do think there's something interesting here because, as I recall from Econ 101, the prerequisite to perfect competition was perfect information. Like all market actors needed to have the same information basically to act upon so that you could get these. It's hypothetical, right? You could never actually have this, but this hypothetical situation where all competitors have the same level of information and profits are competed to zero. It seems like Bitcoin mining is the closest thing we have to that because Bitcoin is perfect information basically, right? Like the supply curve between now and 2140. It's open source software, so there's no hidden gimmicks or anything in the code. But that lends itself to creating a mining sector that is brutally capitalistic. And so what lessons have you taken so far in this game? This is kind of like, I don't know, maybe the early days of oil or something.
Yeah.
Like what is this game like?
Yes, and I think to quote a philosopher on this, the highs are high, but the lows are frequent, right, in mining. And so you really, again, have to avoid euphoria, right? I think we love to celebrate the wins. It's great to see our peers succeeding. When they succeed in a way, we succeed because we all comp relatively similarly at times. But again, what goes up must often comes down. And for us, the coming down is as much an opportunity as the going up, right? Because we've seen many players in our space get a little too excited. Believe me, I'm excited. I have long-term, very bullish prospects of Bitcoin, but I am also somewhat pragmatic that I think we're going to take the scenic route to get there, right? And there will be months, quarters, years where Bitcoin looks like a home run. And there'll be months, quarters, years where people really question if this was a project that they wanted to embark upon to begin with, right? And so I think you need to have the mindset of a Bitcoin accumulator, right? You need to keep your eye on that North Star that this is going to become an institution-grade asset class, and we're going to partake in one of the greatest currency stories in history. But it may not be tomorrow. And so you want to build a business that is able to survive tomorrow to make it to that point in time.
I heard someone say once that markets are optimized to move capital from the hands of the passionate to the dispassionate. And so you can be very passionate about Bitcoin and what it represents philosophically, spiritually, et cetera. But then when you're running a Bitcoin mining business, you need to stay hyper pragmatic. What does not getting too enthusiastic actually look like? Because I would imagine one of the areas that miners really get tripped up is overpaying for these machines, right? So how do you know when you're overpaying for a machine? Like, how do you manage that?
Yes. So I think it actually goes back to your point around information, right? And what something is worth, right? And now I'll use the electron as an example, right? So a few years ago, before the AI data center boom, there was not that much competition for a lot of the size sites that we would do. You would want to find energy in the 200, 300 megawatt range. That's a very large amount of energy for a fiberglass factory or a traditional company. For a Bitcoin mine, that's reasonable. For an AI, that's an opportunity, right? For an AI factory, as they call them, right? And so for us, we found that we are now getting, we are bidding against, or we can bid against as an industry against the AI folks. And the key thing is they're having their own euphoria cycle, right? Yeah. And so at times I do wonder if the only people more euphoric than the crypto crowd is the AI crowd, right? And I think AI is bringing tremendous benefit, right, to civilization, to society, much like Bitcoin is. Yeah. I am reluctant to get sucked into a bidding war with folks like that, right? And so for us, we're very fortunate in that not all electrons are created equally, right? And so there are sites you might call stranded energy, right? Sites or places that maybe the energy is not stranded, but it doesn't have fiber, it doesn't have redundancy. If you're running a multi-billion-dollar AI campus somewhere, it can't go down, right? You need more than a Starlink to get the data back and forth, right? For Bitcoin mining, we are, way I view American Bitcoin within the Hut 8 portfolio is we are a customer of first resort. We're able to go into these markets and use a couple of Starlinks, right? Build fairly hardy facilities in dire places. And over time, as the AI case for some of these sites is fleshed out, there may be an opportunity for us to move on to another place with better, cheaper energy for us and an AI campus to come in at those sites, right? But I don't typically find that we are going to be competing head-to-head with the AI folks because, again, we're not overly euphoric.
Yeah, and you have a much more realistic ceiling, right?
Yeah.
The Bitcoin market price is always there staring you in the face, telling you if you're overpaying. Yeah. But I still feel like in, let's say, bull markets or even late-stage bull markets, there are times where it would make economic sense to buy these machines at current Bitcoin prices. Yeah. But then there's lead times and et cetera, et cetera. So like, how do you know when you've crossed the Rubicon on buying the machines?
It's an excellent analogy. So one of the ways I think for us is over the time and over the market cycles, the team at American Bitcoin has thought about how do we compress those cycles, right? I can't change the speed at which Bitcoin is mined, right? Can't fully influence interest rates or capital markets. But is there a way for me to shrink what you might call flash to bang and really get the mine up and running? Yeah. And so one of the opportunities or strategies that we've pursued that differentiates us from other players is in combination with Hut 8, we've worked with one of the vendors where they will mine Bitcoin or they'll get machines situated at a given site. And then at our discretion, we can exercise an option to buy those machines. I see. Right? But historically in mining, you decided you wanted a couple exahash of machines, right? That's a pretty decent sized build. You would wire the money overseas, right? The machines would come out on the slow boat and then you'd build a site. But by then it's been 6 months, right? And so who knows where the puck is.
Lifetime in Bitcoin.
It's a lifetime. Six months is a lifetime in Bitcoin, right? So, in the options market, there's this idea of theta decay, right? Which is the time value, right, of the option. I've really, with my team, we have really tried to create a scenario where when American Bitcoin says go, we go, right? And money is transferred, machines are turned on, or machines are switched to our wallets, and we're mining immediately. And so as someone who really wants to run this as a credible business, my business planning cycle actually gets much more straightforward, and it can prevent those moments you're describing where, who knows, in 6 months, what if it's double, right? Yeah. So suddenly I understand having a scarcity mindset in Bitcoin because there's not a lot of it, but having a scarcity mindset in Bitcoin mining can be lethal.
I see. So you would opt to pay for that contract optionality to get the machines when you're flash and bang are ready to go off together rather than doing the whole lead time game.
Exactly. I think the lead time game, it made sense, but this is a maturing industry. And so these are structures that were not really a thing a few years ago. And so trying to find ways that are good for us, good for our partners, the vendors, good for our energy provider, Hut 8, and creating a more efficient market with better information. Because I don't know what the price of Bitcoin per se might be in 6 months, but I probably roughly know what it might be tomorrow.
Yes. Okay. So going back to always being a bronze medalist and not being a gold medalist. I don't. Maybe this hasn't happened yet, but is it in the strategic vision to try and acquire some of those gold medalists at a discount when they do get out over their skis.
That is correct. And there are two ways in which we could do that, right? So you can think of American Bitcoin almost at the center of a Venn diagram. On one hand, you have the miners, right? Some good skiers, some aggressive skiers, and some bad skiers, right? On the other hand, in the other circle, you have the accumulators, right? Or not the accumulators, you have the treasury companies, I should say, right? We are at the center of both because we're an accumulator. And so there are opportunities that may arise in the mining sector where folks got a little too creative, right? Or they overpaid, right? Or or the operations are hard. It's a difficult business to build these sites, right? Where there could be opportunities for us to pick up hash power, right? The computing power at a discount and run those sites under the American Bitcoin brand, right? There's also opportunities on the treasury side where there are folks that I think were seduced by the idea of a Bitcoin treasury without the sophisticated understanding of the capital markets it takes to run that successfully, right? It is competitive, right? You know, if a corporation that doesn't have a long-term view on Bitcoin and is really trying to get a little sugar rush buys some coins, I mean, hope is not a strategy, right, in treasuries. But for us as a long-term holder, if they trade below their net asset value, it could be an opportunity for us to come in here in a synergistic way and accumulate that as part.
Right. So you look at mNAV for that, but
Yeah.
then are you also looking at their cost per coin production to pick up their mining
For the mining
outfits?
side, so two different industries.
Yeah.
We are at the center of both.
Yeah.
And the reason why American Bitcoin is an accumulator that sits at that nexus is very unique to us. There are other larger miners, right? They typically have very high SG&A or overhead because they're vertically integrated, right?
Gotcha.
It's very hard to steer an aircraft carrier, right? If your business contains Bitcoin mining, but also energy infrastructure, potentially energy production, potentially, some interesting hardware acquisitions, things like that, you very quickly assembled an empire.
Yeah.
Right. And now empires are quite cool and maybe give you a lot of optionality, but it could be a net drag on a Bitcoin treasury, right?
Right.
Because if you are new to Bitcoin and you want Bitcoin exposure and some hash rate exposure to blend down the cost of your Bitcoin, you don't really want that other stuff in my view, right? You want to express a view about the long-term value of Bitcoin and mining as a way to accumulate it at a structural discount.
Yeah.
There's very few miners that can operate with a team of our small size, given the relationship we have with Hut 8, that enables us to do this. And then on the treasury side, again, very similar things. If you are a company that owns a lot of Bitcoin, but your other business is a side quest and has very little to do with accumulating Satoshis, at a minimum, I would argue that management is distracted, right? And, I started my career at Bain & Company, and there was a great tenet that we really followed, which is that you need to profit from your core, right, to succeed, right? And so for us, the core is Bitcoin. Makes it very easy.
That is very clarifying. So focus and operational agility.
Exactly.
Probably very necessary in a landscape that changes very quickly.
Yeah.
Hard to build an empire also on that landscape using the same metaphor. What about, so when I looked at this years ago, I think Bitcoin hash rate was something like 3x more volatile than Bitcoin price on an annualized basis. I don't know if that still is the case.
It's an excellent point.
And if so, how do you guys deal with hash rate vol?
So that is an excellent question. And I think hash rate volatility or Bitcoin mining volatility more broadly is a huge advantage for American Bitcoin, right? So the Bitcoin treasury crowd, Saylor really pioneered this, so a lot of credit to him, monetizes the volatility, right? So they issue financial instruments, convertible notes, et cetera, that allow them to monetize the up and down nature of their share price, right? My philosophy, right, as we at American Bitcoin look at what we can do, is that if you like the volatility of Bitcoin, you will love the volatility of Bitcoin mining. Right? Because at the end of the day, we have an operating business that has leverage. Right? Our costs do fluctuate, and hash price, the value of a Bitcoin fluctuates, but it puts some serious torque, quarter to quarter in terms of your financial performance. And from a volatility perspective, we're now able to harness that via financial instruments in a way that is very attractive.
Interesting. And so do derivatives ever come into play? There used to be talk of hash rate derivatives coming online so you could, hedge some of this out. Is that a consideration?
I think we're at the very beginning of the derivatives market, both Bitcoin derivatives overall, historically, a lot of the derivatives market for Bitcoin has been overseas. We are currently in a presidential administration that has become much more amenable to crypto, much more open to crypto being onshore, which is great for American-based companies like American Bitcoin. So as I think about Bitcoin options or Bitcoin derivatives, as I think about hash rate derivatives, right, hash price, et cetera, we're the very early innings of what could be a very, very long and very, very American story as the institutional crowd comes and builds these products.
Interesting. Okay. And then where all are you guys looking in global markets for cheaper energy, or do you try to stay actually just domestic? Like what is the purview on where to mine?
It's a nice question. I think we have a few topics or a few ideas that go into what our mining locations would be. I think as American Bitcoin, first and foremost, my priorities at the Bitcoin come back to America, no matter where it is. If we were to land and expand overseas as either a treasury play, via those capital markets, or as a mining play, first and foremost, you have to get the Bitcoin back to American shores, right? On top of that, though, we really want to think about our energy pricing, right? And making sure that our cost per coin is very low. Now, I feel very fortunate that the American energy grid has enormous amounts of opportunity. North America also, some in Canada, has enormous opportunity. So we have not needed to go too far ashore, we've not needed to go too far offshore in order to find electricity. I'm not saying no, but I think that at the end of the day, our North Star is cost per coin for the mining, and it needs to make sense for us.
And so is that that sounds like there's a little bit of patriotism in there, but that's also just strategic from a regulatory standpoint?
I think America's at the sweet spot for Bitcoin mining. You have incredible rule of law. You have deep capital markets. And you've got a pretty robust set of energy technologies and administration that's very pro-electron.
Got it.
Right? And so while there are other places that may have cheap power, you're typically losing out in some other area, right? There's the expression that God does not give with both hands. And in the United States, in many ways, I do feel like God does give with both hands.
Well, we did found this nation under God, so maybe he gave something there. What if I told you that you could lower your tax bill and stack Bitcoin at the same time? Well, by mining Bitcoin with Blockware, you can. New guidelines from the Big Beautiful Bill allow American Bitcoin miners to write off 100% of their mining hardware investment in a single year. That's right, a 100% write-off. So if you had $100,000 of income or capital gains, you could write off that entire amount by investing it in Bitcoin mining hardware. Blockware's mining as a service allows you to start mining Bitcoin right now with minimal effort. Blockware handles everything from securing the miners to sourcing low-cost energy to configuring the mining pool. They do it all. You can stack Bitcoin at a discount every day and save big when tax season comes. So you can get started today by going to mining.blockwaresolutions.com/breedlove. Again, that's mining.blockwaresolutions.com/breedlove. Bitcoin custody is evolving. Onramp is pioneering a new model, multi-institution custody, which eliminates single points of failure and adds fault tolerance to your setup. With Onramp's multi-institution custody, your funds are auditable on-chain, cannot be rehypothecated, and can only be moved with your explicit direction. Multi-institution custody simplifies private key management, providing unparalleled peace of mind for you and your loved ones. Onramp also helps you seamlessly tap into financial services like trading, inheritance, loans, and more, all without compromising on accessibility. So schedule a consultation with the Onramp team today to learn more at onrampbitcoin.com/breedlove. Again, that's onrampbitcoin.com/breedlove. So I've seen this chart recently that's pretty shocking, actually. I think it's aggregate Chinese energy production. Just completely vertical, right? And the U.S. is basically flat, and they've long since surpassed us. Maybe not long since, but they have significantly surpassed us. I don't recall the axes and the metrics specifically on that chart, but basically China is producing a lot more energy than the United States. However, they don't have favorable regulatory landscape. Like, how does that weigh into your view of global Bitcoin mining?
It does. So governments left to their own Governments left to their own devices hate to compete. They hate to compete, right? This is why the motor vehicles department is terrible in all 50 states because it's very hard to shop driver's licenses, right? The defense story, the national security story, is one of the few areas where governments truly are competing, right? Currency is another, so it all ties together. The Chinese energy story is a good example of the United States, which has great energy abundance in many ways: gas, wind, solar. We have a great nuclear fleet that may expand, frankly. We have the technology, right? What we now benefit from, in my view, is the competition, right? I think this has been a bit of a wake-up call to policymakers at the local, state, and federal level to really adapt and then surpass Chinese energy production. It's not going to happen overnight. We have a few things here that differentiate us from China, one being very, very robust private property laws. So it's not necessarily a case of snapping your fingers and expropriating land and building whatever you want under the power of the state. But I think that from a market forces perspective, your energy chart, which you're calling attention to, is very interesting. But if you look at CapEx on data centers, in the United States, spend on data centers is about to surpass spend on commercial real estate, right?
Wow.
Right. Which, if that goes upstream, creates a massive market signal for energy, right?
Yeah.
And so the Chinese approach, central planning, right? Quotas, 5-year plans, it can be very effective if you bet on a winner and it so happens that they win. But the US's approach, which has been historically much more focused on market mechanisms, right? And pricing as a means of determining the allocation of resources, it's served us well for almost 250 years. And I'm pretty confident that it will serve us well with energy.
Boy, I hope so. Man, that sounds, because that would be, it doesn't matter how much energy China is producing if you don't have that foundation of rule of law and whatnot, because you just can't play there, right? It's too much uncertainty.
It's very tough. It's uncertain. The private property foundation of capitalism, right?
Yeah.
Bitcoin, great example. Your currency being your own, you could self-custody it. No one can debase it.
Yes.
This is in part the energy story and the Bitcoin story do tie together in that manner. But again, I think when it comes to competition, we spoke about energy. I think Bitcoin is an incredible example of competition in currency in a way the world has really not seen in a long time, right? Where, you could argue that all over the world, folks are typically captive to the local currency.
Yes.
Right? Now, with institutions, they can do sophisticated hedging and maybe get dollar exposure, et cetera. But your average middle class
individuals are not doing that.
They're captive to the local central bank in a way, right? And that, to me, is an enormous opportunity for Bitcoin. Now, I think the United States, again, with their pro-crypto administration, has also seen an opportunity for the stable coins, right? Stable dollars. I mean, there are members of the middle class and frankly all over the world that would love to keep their savings in dollars, but have not had the exposure to do so or not had the means to do so. We have built those technological bridges now, and we've given regulatory clarity in the United States. And once again, we're now seeing competing. Just recently, the EU is now green lighting or trying to speed up, frankly, a stable euro. They had no interest in this a few years ago. They didn't have to compete. Why? Why?
Right.
But you see the stable dollar and you see what that could do. Stable euro suddenly comes, right?
Yes.
And again, in the background, I see Bitcoin, this $2 trillion, right, asset class, ready to underscore kind of a debasement-free currency, and I think it's very good.
Yeah, it's definitely catalyzing all of the innovation, if we're going to use that term, in central banks and whatnot. But I still think they've basically, I don't know if atrophied is the right term. They've never had an innovative portion of their DNA. So I don't think these central bank digital currencies or anything like that, they're just not going to work, right? The U.S. government struggles to build a website. How the hell is it going to build CBDC?
I like to look to history for lessons, right? And so one that's very interesting is that the Hong Kong dollar is in many ways one of the original stable coins because it trades in a band with the US dollar, and they're fighting to keep it within the band at times, but it's kind of an OG stable currency, right?
They're pegging it to the dollar through open market
operations and through committee decisions, but they're trying to keep the Hong Kong dollar in a range, right, tied to the USD. So it's got some stable characteristics. The other thing, though, if you go to Hong Kong and you see the banknotes, they tend to have pictures of the bank that issued them on the banknote. And so now if you look at stable coins, right? We don't have a central bank digital currency in the United States, right? But we've got a Circle currency, right? We've got a Tether currency. There's a few of these traditional finance institutions that are going to launch their own currency. Stripe said that they want to do a currency, right? And so in a way, we're seeing this interesting innovation from the other side of the world come to the United States, right, with various competing forms of banknotes. Now, all of them now with regulatory clarity, there's some certainty that a striped dollar or whatnot is protected, or at least has some sort of framework for what's under it, right? But in a way, what's old is new.
Yeah. Yeah. Well, everybody loves the shitcoin, right? The printing money business is a good business to be in.
Truly.
So what we've touched on, like how Bitcoin mining intersects with the energy sector, but another thing, in addition to explaining Bitcoin mining to someone who's unfamiliar with it, there's also the whole project of explaining how Bitcoin mining changes the energy sector, or the influence it has on it, the impact it has on it over time. What are the big things? What are the big needle movers for Bitcoin on global energy markets?
Sure. So within the United States, Bitcoin mining solves two issues, right? One is intermittency, and the other is stranded assets. Right. And so as you think about mining, you think about, how am I going to turn energy into currency at the lowest possible cost, right? The energy grid in the United States is frankly very lumpy, right? We've seen a massive emergence of solar, right? You're harvesting energy from the sun. The cost of a solar panel has been a plummeting curve beyond expectations. I mean, you see old charts of where they predicted solar capacity would go over time, and usually it's a sigmoidal graph, and it seems like it's actually where the top is. We're not there yet, right? Wow. Globally, it's incredible to see the advent of solar. Now that comes at a cost, though, right? Sun doesn't shine at night. Now, government officials may prefer otherwise. If they could legislate, in the name of ESG, that the sun shines at night, they would probably do so, right? But it doesn't, right? So it's created an interesting market signal, because during the day, in deregulated markets, sunlight's quite abundant and solar panels are quite cheap. And so you've seen in Texas, for example, where I live, some of the hottest days of the year, right, in Texas have actually had very reasonable energy prices, right? And that's partially due to the fact that it's sunny outside. And so the hot days tend to be sunny, right? And so it's been a balancing force. However, as soon as the sun goes down, where's your base load, right? What are you going to do to actually power stuff at night? Right, because a lot of energy use spikes. There's something called the duck curve, right? Energy is not necessarily a nice graph, right? And so the ways that they've tried to get around this, right? The batteries are an up and coming way to do it. You could build natural gas. You could overbuild thermal, sources of energy that can work at night. But that doesn't actually solve the daytime abundance issue. And so in a way, Bitcoin mining is a way to monetize that energy into a very rapidly fungible currency, right? And so even if a utility, or even if an independent power producer was not philosophically long Bitcoin to begin with, typically businesses are philosophically long getting paid, right? And so miners have been able to step in as that customer to shore up a lot of this overproduction of energy. Again, I actually don't think overproduction of energy is really a thing. What I mean by that is that every electron that humanity generates, right, it captures, right? And that where you've seen that actually play out is oil and gas, where just because the United States is reducing oil consumption, or China is trying to wean off of coal, that energy trapped in these fossil fuels is getting sent to another market where someone will buy it. Right. Every hydrocarbon that is mined is used, or every hydrocarbon that is extracted is used. Right. And so Bitcoin miners, over time, again, we're still fairly early. Industrial mining or massive institutionally scale mining is still new. But over time, you will see mining, I believe, be part and parcel with the energy story of a given grid overall. Right. Because you have some surplus electrons, at least for a time being. Sure. Right. And we can come in there and be that customer for you.
So is that the energy buyer of last resort kind of narrative, that it's basically when these electrons get oversold, there's just a buyer that will buy them?
Overproduced. Yeah, overproduced. If markets hate imbalances. They try and self-correct, right? Every surplus tends to be followed by going out of business. So it's followed by scarcity. Markets have a cycle, right? And so we've discussed the Bitcoin cycle. Energy oftentimes can go on a similar cycle. I do think, though, that when it comes to energy in the U.S. and globally over time, we're about to enter into a new era of human energy production, but also consumption. And let me explain. We are now able to turn energy into currency. Right? This is a new innovation from Bitcoin, very straightforward, right? Now, you could argue that back in the day, you turned gold into currency via a lot of energy as well. This is much more efficient, right? So that's level one. Level two, which is we're just hitting now, is you can turn energy into intelligence, right? Data centers, AI factories, as NVIDIA calls them, right? So suddenly you can turn energy into intelligence, which is almost fungible as a good. You could route it towards generating movies. You could route it towards pharmaceuticals. You could route it towards writing college essays for kids. I mean, the fungibility of energy into intelligence, that is fairly new. And that is a big deal. Now, the third layer, we're not there yet, but in the next couple of years, you're going to see the advent of industrial robotics at a scale we've never seen before. And suddenly your ability to turn energy directly into labor, wow. I mean, again, looking at historical analogies. If you think about the garment district in New York, why were people sewing clothes in New York City, right? Now it's all studios and lofts and ritzy apartments, right? Why were they doing that? Because that's where the labor was, right? That's where the labor was. You're going to see that happen again where all of these robotics or roboticized industries are going to get closer and closer to the electron because that's where labor is, and that's where labor is going to be.
Wow, that's fat. So that would be a very serious reconfiguration of the global economy then.
Correct.
Okay.
Correct.
Fascinating. Okay. If that happens and we get part and parcel to what you're saying is a massive productivity boom, right? We're already getting it with AI.
Yes.
Getting it with Bitcoin to some extent.
Yes.
I think it's probably going to accelerate as Bitcoin really starts to go mainstream. But if we start turning energy into labor, then we're going to displace tons of jobs, right? What AI is doing to the white collar work, the robots. Well, robots have already done this to blue collar work, but this goes to a whole nother level. Right?
Yeah.
So then what are we looking at? Are we looking at a world of collapsing prices and, governments that are trying to print money and keep prices going up? What's going to happen with the collision of those two titanic forces?
There's that famous quote that the future is already here. It's just not evenly distributed.
Yeah.
And so if you look for clues as to what's going to happen, one of the really interesting examples has been the automation of ports. Ports, intensely backbreaking manual labor historically, right? There was some mechanization. Suddenly you're not carrying stuff with your back, right? Then there was robotization, industrialization, and automation, right? The way different countries have responded to port infrastructures is quite telling, right, about what their philosophy will probably be towards AI displacement of labor, right? So in the US, we actually have a very powerful union, longshoremen, that protects a lot of the ports. We have seen a stubbornness on the behalf of policymakers to really lean into the automation of ports, partially because there's effectively a guild that is weighing in heavily on those decisions, okay? China went the other way. Very automated ports. They're running 24/7, insane efficiencies. Shanghai is one example. You've seen phenomenal automation of infrastructure. The one that has been interesting in the middle is actually Europe, right? I believe it was the Swedish port, which was unionized, right? Where they talked through what were they going to do about the automation of the port, right? And one of the officials in this Nordic country basically said, look, we're not here to protect jobs. We're here to protect people, right? And so they put a lot of their emphasis on retraining, right, and redeployment. And what are you freeing up the time of the personnel to do, right? Because yes, of course, the literal job of maybe moving the box has been automated, but maybe that's not 95% of the job. And if it is, what are we now able to do if the price of that is going to zero? What is another opportunity for this person that we can support, right? So it was a very human-centric approach to protect what's effectively labor protectionism. I think we'll see versions of that story writ large across industries, right? So again, there's really three paths. You just let it rip and you automate everything, and you weirdly you let the free market almost decide, right? What are those people going to do? Well, they'll have to figure it out, right?
Yeah.
You can go the other side where you have a very, very strong guild, and there's a joke that the future will be a bunch of roboticized movie makers and a longshoreman just hanging out, right? It's the last two jobs in humanity, right? But then there's this middle ground where you could be protecting the people.
Yeah.
That could be the role of labor in that market.
Interesting. Yeah, I mean, I'm definitely a let it rip free market maximalist type and adapt or die. But the way I look at it is like all of those benefits ultimately accrete to everyone that's using consumer goods.
Precisely. Yeah.
So, I don't know. The whole unionized thing, like that's the same problem with government basically, right? They're squatting on land or equipment and using coercion to drive up prices for everyone else.
Yeah, it's what we really need to avoid, no matter what happens, is avoiding a rentier economy where people are simply extracting value from very little give.
Yes.
Could be bad, yeah.
One of my highest health priorities is keeping my brain in top shape. To take care of my brain power, I do many things, such as striving to read, write, exercise, and meditate daily. One of the latest tools in my brainpower toolkit is MindLab Pro. MindLab Pro is a nootropic supplement that is scientifically proven to enhance your brain power. When I take MindLab Pro, my mind feels like it has a better grip on the world, my thinking is more lucid, and the articulation of my speech is radically improved. MindLab Pro has been tested in rigorous, double-blind, placebo-controlled human trials and has been proven to enhance brain power for users in every age group. MindLab Pro is an advanced formulation of 11 nootropic ingredients and is backed by research from over 1,400 human trials conducted over the past 32 years. So if you're looking to enhance your brain power, MindLab Pro is an excellent solution. Go to mindlabpro.com/breedlove to start enhancing your brain power today. Again, that's mindlabpro.com/breedlove. If you're listening to this podcast, you probably get it. You get that Bitcoin changes everything. For those of us that get it, it is important that we use a smart way to buy and hold Bitcoin. My friends at Coinbits, the oldest Bitcoin-only exchange in the United States, have recently pioneered the concept of roundups, which lets you turn your spare change into Bitcoin. Simply connect your payment cards and all your purchases will be rounded up to the nearest dollar, letting you stack sats without even thinking about it. My favorite feature is Coinbits Plus. For $10 a month, you get the best spreads on Bitcoin, which lets power users save on fees and buy even more Bitcoin. All that, plus peer-to-peer payments, target orders, price alerts, and more means you can do almost anything you want to do with Bitcoin using Coinbits. So go to coinbits.app/breedlove to sign up today. Again, that's coinbits.app, coinbits.app/breedlove. So one of the tropes I've used in the past is that Bitcoin is more American in spirit than the U.S. Constitution. Like it may be, if you're looking at the founding ethos of the United States, I think Bitcoin might be the most American technology there has ever been. Now people sort of twist that and they're like, what do you mean? You know, a guy named Satoshi Nakamoto invented it. How could it be American? It's like, well, I'm not actually specifying it to the nation state, but more the ideas that underpin the founding of this country, you know, life, liberty, and where I think we messed up, we should have made it inviolable private property. We switched that to the pursuit of happiness. But Bitcoin is that, you know, like it incentivizes the preservation of life. It's very empowering to the individual. So it gives individual a lot of liberty, and it does that by virtue of being inviolable private property if you custody it correctly. So and clearly America's, what's a nice way to put this, degenerated significantly from those founding virtues. I guess the question is how or can Bitcoin help save America or revivify it in some way?
I think that's an excellent question. So look, America has an operating system. Bitcoin has code. In some ways, very similar. Now, over the past 200 plus years, there maybe have been some glitches in the code or some bugs were discovered in the code. When you have glitchy code, you can do one of two things. You can either fork it or you can patch it. Now, I come from the train of thought that we should patch it, right, as an operating system because it served us very well. I think it will continue to do so in the future, but it could probably be patched to make it serve the American citizen even better than it has for the past 200 years, right? So as I think about, well, what are these bugs in the American code? And what are these glitches, right? One is fiscal decay, right? You have a central bank that is conjuring effectively trillions of dollars now out of thin air. Now, again, it was a patch from almost 100 years ago that was, I think, written with good intentions. We are in uncharted territory. Our debt is in the 30 trillions of dollars, right? Incomprehensible amounts of money. We have interest to pay on that debt, and you're really at a logjam, right? And so one of the ways that we've tried to solve for that glitch, so to speak, is we print more money, right? Which has led to fiscal decay because obviously our savings as Americans is predominantly in American dollars, right? So that's the first bug, right? The second bug is the centralization of power, of economic power, right? So the United States, through things like the SWIFT network, et cetera, through all sorts of interesting financial maneuvers, some born of like the Patriot Act, some going farther back in time, has really been able to centralize economic control in a way that was probably not contemplated by the framers of the Constitution, right? The third issue here is the weakening of property. So this ties back to the fiscal decay issue, right? Which is private property is as American as apple pie, right? But if your private property is in the forms of savings, and that savings is decaying due to government excess, that is antithetical to what America is built upon, right? So each one of these things is a bug in the American system, and I believe Bitcoin is the patch for all three of these things.
Well said. It's a good, very useful metaphor. I don't know, is it a metaphor? No, you might be right. It is ultimately just software, right? It's just written on parchment instead of actually on silicon. I do think you could trace those three back to 1913 founding of the Fed, though, right? Isn't that where we really went off track with things? I mean, definitely the centralization of power. Printing of money is the violation of private property. It also funds the centralization of power. Those three-letter agencies tend to get a little more aggressive with the violation of property, and you get in this very vicious cycle very quickly. Where do you think we went off the rails?
It was maybe a 1-2 punch, or maybe a few more punches than that. Right? I think the formation of the Fed put us in an interesting direction. Again, I will chalk up good intent truly to it. I don't think it was malevolent. I thought you had decent people making hard decisions with no crystal ball. I do think that even by their standards, it's probably gone a bit far, right? So I think the formation of the Fed created a money system that started to untether the value from labor. I think that getting off of the gold standard too. Again, this was due to speculative attacks on the dollar, right? That were only really enabled by the Bretton Woods system in the first place. Right. So you could almost go back to our software analogy here, where we started accruing these bugs, and then rather than patch them, we just created more technical debt. And we at some point need to look back and say, wait, hold on, is there a more comprehensive overhaul of this needed?
Right.
I've actually read sort of Nixon's speech when he talks about the need to effectively depeg the dollar
temporarily.
It's funny how temporary powers sometimes are anything but. And again, I read these communications because I try and put myself in the shoes of the policymaker. Right. I think of FDR, who also massively expanded the role of the federal government. Right. Confiscated gold. Right. You think people talk about confiscating Bitcoin and how that it's outside the Overton window. There's no world in which we would ever confiscate private property, especially something as fundamental as gold. Well, we actually did that already. So
less than 100 years ago,
right? And so it's for some of our maybe very old members of the Senate, it's almost in living memory that we did this, right? So, I do think you need to look at these historical examples of policymakers who I believe were generally earnest in wanting to do the right thing, but through circumstantial need and emergencies, made a bunch of temporary decisions that got baked into it, and then people were profiting from these temporary decisions, and there were incumbents based upon these temporary decisions, and suddenly they're not very temporary anymore.
Yeah, that lands for me. I've had a guest on that used the term meta fraud at one point. Is like, it's not a bunch of James Bond-esque villains sitting in a room smoking cigars plotting the end of the world. It's that progressive sequence you just described, right? Where they're putting temporary patches, but then the patch just happens to have a little, carve out for them and their friends, so they're getting paid on it, and then it just keeps going in these layers, and before you know it, you have kind of this duct taped rat's nest situation, and that is just good for no one. What do you subscribe then to the corruption of money being like upstream from so many of the other problems we have in American society? It's not just economic, right? It's socioeconomic. People, there's the website, whatthefockhappened1971.com.
Excellent.
Obesity, addiction, suicides, collapse of the nuclear family. It goes through this whole gamut of data that's gone off the rails since 1971. I was just curious how much you subscribe to that.
In a way I do, right? So I think it was Kant who said that out of the crooked timber of humanity, nothing straight was ever made. And once you started leaning into fiat, a lot of problems will arise from that, because again, it's predicated upon trust. And to your idea of meta fraud, it becomes less trustworthy over time, because these minor allowances become major problems very quickly. Right. Again, I've met several Fed governors. I don't individually think any person is conspiratorial and is doing this. I genuinely think they want what's best. But I would almost analogize it to, if you've ever seen Austin Powers, there's a scene where he's stuck in the corridor trying to reverse and push the car forward and backwards. Yeah. And I'm very almost sympathetic to the policymakers that find themselves in that position. Right. Yeah. So to move overseas briefly before bringing it back, if you look at the UK, same sort of Anglo property rights regime. So it's an interesting counterpoint, right? They have the Bank of England, so they have an even more overt central bank. They have a problem that we don't, though, which is 1% GDP growth. Right. So we, as I've said before, hope is not a strategy. But listen, with AI, robotics, energy independence, the United States has a lot of really promising things going for it. I think the UK finds itself in a harder spot for a variety of reasons. And GDP growth is slowing. Post-Brexit, there's been some fiscal damage perhaps done. I think decisions that they made in the moment for very earnest reasons, but now they're struggling in some ways. But they have the same tools oftentimes that we have, right? Which is print money. Yeah. And so if things start to wobble globally, financially, which we've talked about hyperdollarization or hyperbitcoinization, you know, there's a category of there's a category of countries I would call the wobble states, which are the places that are more likely to wobble faster, right? And so, yes, the U.S. might be in a fairly dire situation with tens of trillions of dollars of debt, but we have at least a few more levers we can pull on the work side that some of the peer economies don't, right? And maybe I should break that down. There's really three groups of economies that I'm somewhat worried about, right? The first are the sovereign debt addicts. So the U.S. potentially is one of these, right? Classic example is Argentina, right? Which is debt. Debt is a tricky thing. It's fun until it's not and the bill comes due, right? Those countries are going to hit debt overhang issues unless there's material changes in the way they run things. Obviously in Argentina, you've seen a policymaker focused on a form of anarcho-capitalism. Seems like he's made some promising efforts thus far. I mean,
anything's better than overt socialism, right?
Honestly, it's a low bar. There's a proverb in German, which is "Don't praise the day until the evening." So I think we'll see what happens there. But thus far, I'm open-minded, right? So they're these debt addicts, right? Then you've got what I would call the demographic time bombs. All right, these are countries like Italy, like Japan, where if you just look at the birth rate or you look at the demographic chart, it's not headed into a happy place for the economy and specifically for the social benefits that they're putting onto the workers to support everybody who is further up the chain here. They're also going to hit a problem with the way that they're running their currencies and their debt situations. And then the third and final group is what I would call the brittle autocracy. So these are countries, nation states, where they typically run off of some natural resource. But we live in a dollar-based world, the exorbitant privilege of the US dollar. And so these autocracies are pretty brittle because if the price of that currency moves in a way that is against their fiscal policy, they're really struggling with the dollar side of that equation, right? And so each of these three groups, right, the debt addicts, right, the demographic time bombs, and the brittle autocracies, each one of these could blow up in the next decade for very different reasons. But the result would be the same, which is a currency blowout and then a reckoning. And the options are going to be print a new currency, switch to the dollar or a stable dollar, maybe with the Genius Act, or Bitcoin, right? And that's
so no gold in the cards for you.
You know, it's gold. Gold's interesting. The idea that a country would go back to gold, I'm skeptical, and I think this has to do with what Ludwig von Mises calls the saleability of money or of currency. A good currency or a good way to change value has three traits, right? Which is it's scalable, and it's transmittable across time, and it's transmittable across distance. And what I mean by that is that if you truly go back to a gold or gold-backed economy, it is not very scalable, paying with doubloons or whatever. Obviously, you could use paper, but then you're right back to having...
You're right back. And
correct.
That's how we got in this situation.
Correct.
Yeah.
So unless you expect everyone to carry gold nuggets in their pockets, you're going to wind up with currency again, right? Yeah. It's just one of those things for thousands of years, right? Or coin clipping. And I mean, again, these are all problems that have happened before and would inevitably happen again.
Yeah.
The second is a currency needing to be transmittable across space, let's say space, right? And you need to be able to ship it, move it around easily. Gold, again, runs into this issue. There have been stories of currencies demanding their gold back, obviously from Fort Knox, things like that. It can be done. It is logistically very annoying. Gold is very heavy. It's not a super great way to transfer value. But again, it can be done, but I don't think it's competitive to Bitcoin in that.
It usually involves battleships.
There's like a flotilla, or at least think of the Brinks armed guards, trucks, right? There's a reason why, Starbucks doesn't have a couple of gold bars in the back, right? It just doesn't make any sense, right? And then the third is transmittable across time. And that's actually where Bitcoin has historically been the weakest because it's new. It's only been, if you're transmitting Bitcoin across time, it's only been a little over a decade. So this is not necessarily proven out in the case of the currency, right? A dollar bill in the 1970s spends just as well today as it did back then, even if it's worth significantly less.
Right.
Bitcoin, the hope and the belief is that your Satoshis are as good in 2045 as they are today, right? I do believe that if and really when Bitcoin overcomes that hurdle, people are going to open their eyes to it, which is why with these currency crises, I think Bitcoin is competitive on two and potentially all three of these categories.
Yeah, no, it's a great framing, and I actually think I consider Bitcoin to be the perfection of money, actually. And so through that lens, it's infinitely divisible and recombinable. So you can divide Bitcoin down into sats. You could go into microsats if that were ever necessary. So you get this salability across scales that's unrivaled, right? Like what gold dust, gold atoms, that becomes pretty impractical at some point. Paper obviously has that advantage because you can just redenominate it however you want. And the paper's great across space where gold is weak, but the paper's terrible across time because you get the money printing issue where gold is strong because it can't be counterfeited. But then Bitcoin is beautifully both, right? It's digital but fixed supply. So it's, you can move it at the speed of light, but you can't debase it at all. So I agree with you. It's only a 15-year history, so remains to be seen if the salability of cross time will persist. But as long as Bitcoin exists, I think it will. And you could also argue, like over the first 15 years, well, Bitcoin's been the fastest growing asset in human history because of that fixed supply. So maybe the salability across time hasn't won all the hearts and minds of the world yet, but the first 15 years are off to a pretty good start considering its meteoric rise. So
I fully agree.
Yeah. And it's, I think that's actually probably one of the most useful framings for understanding money is Mises's salability. I don't know if it was Mises. It may have been someone else.
I know Sabo actually talked about that as well.
It's definitely in Safeteen's book, and I think he got it from another economist whose name escapes me at the moment. But nonetheless, it's a really useful framework. I've heard you, I wanted to ask you this earlier. It's just reminding me of the question. You've used the word currency a few times. Like Bitcoin is what lets us turn energy into currency.
Sure.
Do you delineate between money and currency?
Interesting question. I don't in common parlance because there's a trap you can run into where you speak to terms that have technical meanings to an audience, and this is whether it's policymakers or bankers that doesn't, and so they get conflated. So I could be more precise in currency versus money and one versus the other, but I run into an issue with this the same way I often would run into an issue explaining that Bitcoin is the antidote to runaway M2.
Yes.
Like
what's M2?
What's M2? Right. I think there's a joke where I said if you told every American that the thing they should be most afraid of is the M2 supply, they would ask you if that's a gang from El Salvador. Right. So again, and I think that this is why as American Bitcoin, we need to be at the vanguard of education, right? And getting folks onto the Bitcoin standard the best that we can. But you do need to meet people where they're at. Yeah,
and that's proven to be quite tricky and really an idiosyncratic game that almost everyone has something to bring to the table that understands Bitcoin because there's so many people at so many different places, frankly. Does that ever present, because I know a lot of times when you start talking about the domain of currency, policymakers, bureaucrats, et cetera, really start to think, oh, that's their domain. Turf. So then if you say Bitcoin is how we turn energy into currency, they may feel threatened. How do you handle that if that's the case?
That's a great point. I think folks are starting to come around to it a bit. I think the safest way would be to just solely talk about Bitcoin as a store of value. I think that is further reaffirmed by the fact that there are very few people admittedly transacting in Bitcoin. So we don't even necessarily need to fight that fight today. Obviously, there's innovations, Lightning Network, et cetera. So the ability to transact in Bitcoin is probably better than ever. But we can take it one battle at a time and as a store of value. I think threatening the sovereign economic powers of the state is a fight that you want to be very selective when you pick that fight. I'm certainly not of the opinion that we need to necessarily do that in the Bitcoin community. People ask often about my thoughts on stablecoins, right? Is this just the digital dollar? Is this a shit coin or something like that? Yeah, I don't take that hardline stance on it. I think getting people off of zero in cryptocurrency or in digital blockchain related monetary instruments or bearer bonds or whatever is a good step. I think that is a good step. I think that the more folks learn, the more they come to the Bitcoin standard. I admittedly came to Bitcoin comparatively late. I think 2015, 2016. I had been living in Indonesia, getting paid in rupiah. When I took the job, I wasn't really conversant in the rupiah to dollar exchange rate, but I realized that my livelihood was tied to that. And then I was trying to better understand who's determining that. And it was sort of a rat's nest of policymakers and bankers on both sides of the Pacific Ocean. And I realized that, wow, there may actually be something to this cryptocurrency situation, right? And I learned more about Ethereum and programmable money, but then I also learned again about the policy and the politics, both in cryptocurrency and outside of it, right? So I came to cryptocurrency thinking it would be bereft of politics. This would be a free space where the best currency win, yada yada. No, there's politics in everything. I think 4 people can't decide where to go to lunch without a little bit of politics, and I think a multi-trillion-dollar asset class is probably no different. But the nice thing about Bitcoin is it's rules, not rulers, right? Proof of work underscores the entire system. Miners are authenticating and securing the network. There's obviously the developers in the core community, but no one can unilaterally, not even Satoshi can unilaterally change, right? Yeah. And so I think having a rules-based system to tie it all together is what made America so successful. Yes. I think Bitcoin is a revamp of what a rules-based system for currency can look like.
Yeah, I mean, it takes a level playing field to make a game really prosperous and iterative over time, right? If you have the playing field changing all the time, well, then people can't really adapt a sound strategy or play any game persistently. So there's a very special place called the farm at Okefenokee. It's a 1,000-acre regenerative farm community about 45 minutes northwest of Jacksonville, Florida. The farm is a completely off-grid community. It has total food, water, and energy independence. Everything on the farm is 100% organic, and it even features wild boar and bear hunting. The farm at Okefenokee is right next to the Okefenokee National Wildlife Refuge, where you can do camping and canoeing tours. So if you're like me and you're interested in the self-sovereign lifestyle, then you can get your own lot on the farm at Okefenokee if you tell them that I sent you. Once you get a lot, you can build one of 3 custom cabin options. So if you value freedom, self-sovereignty, and living in touch with nature, then join me and my family. We have lot number 21, and we're going to be building a cabin there starting December 2025. To learn more about the farm at Okefenokee, go to okefarm.com and make sure to tell them that I sent you. If you're a Bitcoiner, you need the Orange Pill app. It's where you can connect with other sovereign individuals locally and globally. It's great for when you travel, to meet local Bitcoiners, to go to Bitcoin meetups, and to find local merchants that accept sats. No distractions, no noise, just real Bitcoiners. So download the Orange Pill app today and find your local Bitcoin tribe. You talked earlier about DMVs. And I think Elon said something to this effect, right? The government is the DMV at scale, which is a useful metaphor for understanding how ineffective and incompetent centralized government can really be, just as a result of bad incentives, right? That they are monopolists. They don't have an incentive to be accountable to your preferences necessarily. But you've also made this point before we recorded that you think that Bitcoin sort of forces governments, or maybe forces is too strong of a word, incentivizes governments to compete with one another.
Correct.
How? Like for someone, and I'm with you on this, but like for someone who has no idea what we're talking about.
Sure.
Walk me through that calculus. How is it that changing to a incorruptible digital monetary system all of a sudden puts government actors in more of a free market paradigm where they actually need to compete with one another for citizens and tax revenue?
I think it's an excellent question. So governments, again, are not prone to competing and never have been. The only arena typically where you've seen governments have to compete is defense, and then economics as well, right? So those are hence the military industrial complex. But the defense world is one of these very competitive arenas where nation states or states really are competing for a sort of security in an insecure world with no hegemon. Obviously, the U.S. is trying to and has been playing that role with somewhat of a Pax Americana. We're seeing a geopolitical shift. Whether that remains the case, I mean, I think the world benefits from it, but we're in an emergingly complex time geopolitically. Now, when it comes to currency or economics, really, governments are a bit funny. Where when I run a private company, soon to be public company, American Bitcoin, we have very clear KPIs, which is I'm going to deliver value to shareholders. And at the end of the day, that's probably in the form of the value of the shares going up. Now, we can describe other benefits I've afforded them or things we've done. This is where ESG and DEI came in, but that became very complicated because how do I weight those effectively corporate policy choices against making money?
Yeah, I don't think shareholders actually care.
It didn't actually go super well. So business tried to become more political. And of course, everything is somewhat political, but business started to take initiatives that strayed. Again, as I said at Bain, you profit from the core.
Yeah.
And the profit incentive is very clear. I'm sympathetic to governments because governments don't necessarily have a clear KPI of we did a good job this year. Now, in a liberal democracy, it's did we get reelected? That's a pretty complicated and somewhat blurry metric. It's very binary.
Yeah, and it does not tell in any way if you served the citizen.
Correct, because the skill set it takes to win an election and the skill set it takes to govern effectively don't overlap as much as one might hope they do. That being said, we have the governments we have, whether in a liberal democracy or in other regimes. And so what you've really seen, though, is a need for those governments to compete across a wide variety of metrics. So I think it was, was it Nepal? No, so it was Bhutan. Bhutan did, growth, domestic happiness, and it was kind of obfuscating a lot of these different things or trying to come up with new metrics. But there's a joke about GDP, which is you'll have people that protest GDP as a good yardstick for an economy, and they'll quote something else that correlates like 0.9%, or sorry, they'll quote something that correlates 0.9 with GDP, right? You'll say, GDP is not a good metric. Maternal health is a good metric. Okay, well, if you run the stats, GDP is fairly indicative of maternal health or things like that. Yeah. So
standard of living indices.
Correct. And so there are a lot of things you can bundle or unbundle that are related to GDP. But at the end of the day, we could probably agree that a country with a higher GDP or a higher, more robust economy probably downstream has a bunch of other great benefits of that high GDP. Not always, but generally speaking, all else being equal, high GDP is probably good for that thing you care about, right?
Yeah.
So where does Bitcoin factor into this? Okay, well, high GDP is generally tied to economic integrity, right? And so if your country is undergoing a form of fiscal decay or a lack of consumer confidence, or inflation, right? Or any number of economic issues, which we're seeing unfold in different economies around the world, it's going to hurt GDP, which is going to hurt those things that the policymakers care about. In whatever non-GDP form it might take, that probably correlates to them getting reelected or staying in power and not getting couped if they're in some kind of authoritarian regime, right? And so Bitcoin, for a lot of these folks, could be a differentiating factor, right? Having a hard currency, having one less thing that's not under the machinations of a group of policymakers that may or may not answer to them, right? And you've seen, central bank independence is a great example, right? Some countries, there's no central bank independence. That's gone in all sorts of ways, but usually has created a degree of unpredictability because it's political. There's other countries where it's been immensely technocratic and they've really tried to isolate the bankers from the population. But then the issue you run into there is it anti-democratic, or you've gone too far the other way, where you out of your desire to insulate, control over money, currency, the economy, interest, you've now put it in the hands of unelected folks, right? And so there's a very tough balancing act where every country is going to have a different answer, and frankly has. But every time I do wonder, what role could Bitcoin play in making this a little bit easier?
Interesting. So is it something like just giving people access to strong private property that's independent of the state holds the state in check.
Yeah. Yeah. Right. I think increased reliance upon the state begets more reliance on the state. Right?
Sure. Yeah.
And so, what the state can give, the state can typically take away. Right.
And everything the state has given, it has taken from someone.
Correct. Right. I mean, your person A is funding person B with person C's money.
Yeah.
Oftentimes, right? Yeah. Or if they're not, they're printing it. Those are really
which is still being funded by,
of course,
savers.
or someone in the future is going to have to pay that bill, right? But unfortunately, the bills do come due and the currencies collapse. And again, this is why if you look back over the history of economies and currency and money, people build up these piles, and then eventually it comes down because somebody doesn't like what they're getting paid in. Right. And then it actually, if we're going to really make it more broad, it ties back to state control over violence. Right. And so people talk about the United States dollar and what is the dollar backed by? Okay, the dollar is backed by the faith and the credit of the United States, right? But that in turn is kind of tied to the ability of the United States to enforce its terms as needed. And so, why do you like the US dollar? I mean, it's backed by like 11 aircraft carriers. I mean, that's pretty, how many aircraft carriers does Bitcoin have, right? So I can understand the argument that folks make around state capacity for violence being funded via the military, which is funded in turn via paper money, right? Where it's interesting is, okay, assume you don't have 11 aircraft carriers, right? Do folks in some of these more brittle autocracies want to get paid? Does the military that is nominally protecting the head of state want to get paid in Chuck E. Cheese tokens, right? Probably at a certain point, not. And so if you even think back to the Romans and like the Praetorian Guard, yeah, sure. Okay, there were emperors who had power over life and death and all these different things, but they were really kept in check by this group of men ready to perpetrate violence if they felt they were not getting paid, right? And so you had a series of what they called the barracks emperors, right, who were Roman emperors who came in and around the Praetorian Guard, probably because at the end of the day, the state's capacity to do violence also applied to the people running the state, right? And so as you get to Bitcoin, it's just an interesting alternative, right? The state wants to control money and the state wants to control violence. And there may come a time in some economies where the locals don't want to get paid in the dollars or whatever the local currency is. And your options are going to be either take your chances with them or find something that they want to transact in, which could be the US dollar, could be a stablecoin, or could be Bitcoin or gold for that matter.
Yeah, I think it's one of the most fascinating branches in the Bitcoin rabbit hole, the whole relationship of Bitcoin to the economics of violence and force. That we potentially do move into a world where, the traditional government strategies of coercion, compulsion, violence, they just don't pay as well. Therefore, these institutions and organizations shrink in both relevance, revenue, et cetera. And that's very optimistic for the future of the species, right? Like more productivity, more cooperation, less coercion. But obviously we have a long way to go. When you get to that branch of the rabbit hole, you really lose people sometimes. Or like, it's impossible. Human nature loves war and violence. We're never going to do anything different. I tend to be more optimistic. I think we're very incentive responsive creatures. And if crime doesn't pay as well, then we probably won't do it as much. And it does seem like Bitcoin does decrease the profitability of crime, broadly speaking, violations of life and liberty and property.
It does. I tend to agree. I think that oftentimes prosperity leads to peace. I mean, for a long period of time, there was they called the peace at the Golden Arches.
And isn't that's a feedback loop, right?
It is.
Because prosperity leads to peace, but then peace would also lead to prosperity.
And the joke on the Golden Arches was that countries that had McDonald's historically did not fight wars. Right?
Oh,
if there were McDonald's in two countries, why ruin a good thing? Right? Obviously, over time, this is not proven to be as robust a security theory as one might hope. but I do believe that when folks are entangled economically, it disincentivizes violence because your economic coordination, across varying groups, it cuts across a lot of ideological concerns. Now, not perfectly, right? There, unfortunately, to your point, I think there is a human proclivity to violence in some way, shape, or form. But the old joke that if it's bad for business,
sure,
right? And this has been true. There've been many examples in history of areas that are run by cartels or run by autocrats that were quite on the surface safe and stable, right? Because violence was bad for business, right? And the role that Bitcoin can play in that is, if folks realize, a Bitcoin-based economy is a better token to get paid in, or a better means of value, it could disincentivize, borrowing money in paper. Could disincentivize mercenaries taking your money. I mean, your money's no good here, right? There are a lot of examples where the inability to pay for stuff means you frankly don't get it. Right? And a lot of banking emerged, if you think about the Middle Ages, a lot of the more sophisticated banking technologies was funding wars. Something I know you're aware of, right? So if it can be a little harder to fund wars with fiat, I am sure people are creative, and in some ways states are violent, and they will find ways to fund wars with Bitcoin or whatever the store value is of the day, but it will probably be a little harder.
Yeah. Well, that sounds like a step in the right direction, at least. I am optimistic about Bitcoin making the voting with our feet higher signal. You know, that people now can leave jurisdictions where they're mistreated with more of their purchasing power intact, or all of their purchasing power intact.
I agree with that. And so to your point about governments needing to compete, there's the concept of the Laffer curve, right? Which is the maximally optimal place to tax people is not at the max, right? There's a point at which people do leave. Right. Historically, it was pretty high, right? And so California, as an example, in the U.S., the sunshine tax, they just keep raising taxes. They're trying to find the sweet spot where one more person leaves and they'll lose money, but we'll squeeze you for every dime right up until that point. New York now, with maybe a new government coming to power, we may find another example of that on the East Coast. The Laffer curve is interesting in a Bitcoin standard world because, to your point, the portability of the money, right? And if you think offshore money is compelling, I mean, having it in Bitcoin is even more
offshore money in your pocket.
Right? I mean, you walk. I think it's better for people at the high end of the food chain, right? Who want to preserve their wealth under whatever regime wants to take it, and it's actually great for people at the lower end of the economic spectrum, right? Where if you're a refugee, I mean, there's examples that were coming out of Syria as an example of, I mean, how much did it cost to escape? Well, what's in your pocket, right? And you no matter what you had earned, you basically reset to zero as the price of escaping. And it's not great, honestly. So I think that this is a new avenue for folks to preserve wealth, and it forces governments to compete because, it used to be that if your wealth is largely in land, they could crank the tax rate quite high. But if your wealth is in sort of a bearer instrument, it's a lot harder to compel you to stay.
Yeah, and that is additive to people already being very mobile, right?
Yeah.
That we had obviously an increase in mobility with transportation technology, telecommunications, let ideas move quicker, and all of these things. So this does seem like we're moving into a world where people are more capable of self-organization rather than adhering to the fixed boundaries of nation states, or the semi-fixed boundaries. I guess they do change sometimes.
Yeah, they're more fluid than maybe we thought they were going to be with Fukuyama, but yeah, largely accurate.
Okay. I guess I should ask you about this first. So this is kind of a divergence back to what we talked about earlier. Bitcoin miners, you're trying to be the bronze medalist that always survives, right? It's you're optimizing for survivability rather than, let's say, being the most profitable Bitcoin miner in any given quarter or year. So that necessitates you go through multiple bull and bear markets. Yeah. But you're always focused on Bitcoin accumulation, right? Yep. So both an operator as a Bitcoin miner, but also an accumulator, that the center of that Venn diagram we described earlier. How does the strategy shift as you go through bull markets and bear markets? Like what are we talked about some of the dials and some of the management philosophy you're doing, but is there a major strategic shift when Bitcoin, I don't know, goes, I guess how do you classify a bear market, first of all? Once it's in a bear market and you're in a bear market, how do you act versus how you act in a bull market?
I think it's an excellent question, right? And I think we have a few levers to pull. Right, and back to the Venn diagram, right? There are opportunities that would arise in a bear market on the mining side. There are opportunities that would arise on the Treasury side. So to go into the mining side of the equation, we've seen this. We've actually done this successfully in the past as we went through a cycle historically. Folks will overlever. There will be bad deals with good bones. Right, deals gone south, and we somewhat opportunistically can find ways to recap that infrastructure, find ways to fold it into our business as it makes sense. Because again, I always want to be profitable, right? I think the bronze medal is a great analogy, but the key thing is if they're giving out golds for biggest number, I'm not going to win. I don't want to win. Biggest mining number, biggest exahash, biggest pipeline. Those are all not the prizes. I'm glad someone's winning a prize there, but for me, the longevity is the prize.
Yeah.
And doing right by the shareholders. And again, this will take time. American Bitcoin as a company in this new launch, right, is new, and it will take time to build trust. But we will continue what we've always done, which is accumulate Bitcoin via mining. And so in a bear market, there may be weeks, months, quarters, years where we don't do a lot. And there are splashy announcements of other folks recapping companies or this or that. And well, if you buy a bunch of machines, you'll get people excited, right? So like counter-cyclically buy some machines. Maybe, but it actually has to create value longer term. I mean, I'm not really someone that wants to wake up and check the share price. I don't think that's good for the company. I believe it was Munger or Buffett who had a great line about how in the short term, the market is a voting machine, and in the long term, it's a weighing machine, right? And I just want to be weighed. What happens day to day, if the Fed chairman sneezes, the market moves. I can't let that get in my head. I know what we're doing on the mining side, cost per coin. Yeah. Now on the Treasury side, that's more interesting from a financialization perspective. If the price of money or the ability to secure capital to accumulate Bitcoin fluctuates, we may hold off on that and may focus on the mining. But if fiat is getting rapidly debased, right? Again, as I said, it's not about buying Bitcoin; it's about selling fiat. And so if I can sell a lot of fiat to get Bitcoin and get in that escape hatch faster than my peers, that could be a great opportunity there.
Gotcha.
There's one other aspect I think would be very interesting to think about. So as I said, we're a Venn diagram, but I would also view our business at American Bitcoin as having 3 layers, right? Layer 1 is the mining. It's a foundational operating business, running it like a lemonade stand. You understand what I do. I understand what I do. The investor should get very comfortable with our business, right? Second layer is the treasury strategy. It's a little more complicated for folks, right? We're monetizing volatility. It's about mNAV. It's a more sophisticated investor's sort of game, right? But we're architecting something that is net accretive above and beyond the mining, right? There's a third level here with Bitcoin overall, which is the ecosystem play. And so Bitcoin has been somewhat marooned historically. It has had not a lot of these decentralized apps, these dApps, right? There's not a lot of Bitcoin DeFi yet. There was some NFT stuff, runes, ordinals, knots. There's a few of these technologies, but Bitcoin generally has played as a digital gold on an island from crypto. I think that's about to change. I think that you're going to see a Cambrian explosion of applications related to Bitcoin, with Bitcoin as the underlying ledger, universal source of truth, where they might have historically netted out to Solana or Ethereum or pick your VC style chain. At the end of the day, I think Bitcoin is the best currency for reasons we've discussed. And when that happens, I think something interesting will flip, which is that block space will get valuable, or will get more valuable. What I mean by that is miners make money from that subsidy, which we described, that 450 coins per day distributed pro rata among the Bitcoin miners. Miners also make money from transaction fees, the velocity of the Bitcoin moving around the system, right? Bitcoin doesn't really move around the system all that much, and the block space is not used by that many updates, right? There's not a lot of ledger updates per block right now, right? But you can almost think of it kind of like real estate, where Act 1 was homesteading, where you could stake out some block space, and we could probably write the U.S. Constitution. Maybe we'll do that, write the U.S. Constitution in a block space, right? It's real estate on the blockchain where you can write code into it, right? Level 2 is going to be like the zoning laws, which is where the network starts to get congested. You've seen this now happen. Folks who are doing ordinals or runes, NFTs, and more traditional Bitcoin conservatives saying this is a misuse of the chain. You're making money expensive. You're making transactions too expensive. Now miners are making money off of this because we're processing this, right? But you start to get effectively zoning laws, right? You get these homeowners associations saying, "Hey, hold on, it's not the intent of the chain." I think that this will spur innovation. So when you see things like the Lightning Network or various other layer 2 technologies, we'll find a way to let folks use the chain without congesting it maybe as much, right? But then layer 3, where the third act, I should say, of this is like a megapolis, right? This mega city where we were initially log cabins, and then we had to get some zoning in our cul-de-sac, and then finally there's a lot of things that are netting out to Bitcoin as the underlying ledger. right? Could be property records. Who knows, right? But you have this immutable ledger that you can write stuff into, that you can inscribe with information, right, to varying degrees, or layers built on top of it. And what American Bitcoin is able to do is benefit from each of these evolutions, right? Because as a miner, we had the subsidy. As a layer 2, I had the capital markets volatility engine, things like that. But at the third layer, something block space is useful again, right, or is really useful and potentially lucrative, loops right back to the mining.
Wow, that's a good metaphor. And so, and I've shared in this thesis before that we would see like consolidation at layer 1, and then all the experimentation in crypto networks, shitcoin networks would move up to layer 2 plus on Bitcoin. In that Cambrian explosion shift, or I guess on top of Bitcoin, do you see a commensurate mass extinction event in traditional shitcoin VC crypto land?
It's an excellent question. I think those are great training grounds. I think there was historically a gap that benefited those currencies, right? Which was knowledge and the ability to code, and the ability to code in the respective languages of those L1s, right? I remember going to DevCon for Ethereum in Cancun years ago, and there were guys walking around with briefcases full of cash and flyers saying, if you can code in Solidity, come work with me, right? So there was a shortage, right, of folks that could code in these blockchain languages, right? Bitcoin has the core developers. It's got folks that are working on products related to Bitcoin, L2 levels, et cetera. But there's been kind of a gap because it has been a little bit more lucrative historically to work on some of these other chains and get some grants, get some VC funding and do that. And also not knowing how to code it into Bitcoin. What I see happening over the next several quarters is with the advent of some of these AI coding technologies, the so-called vibe coding.
Oh yeah.
Cursor, Windsurf, et cetera. Your ability to refactor code, or maybe do it with Bitcoin as your underlying L1, is going to get significantly easier. Right. And so it used to be, I only know how to code in Solidity, or I'm a Rust guy. Bitcoin's not my cup of tea. Right. I think the folks will see that they can access the steadfast value and foundational nature of Bitcoin, right? And do cool things with it. Now they'll have to work with an L2. The underlying base chain is it's old and sturdy, but it's maybe not adapted for hundreds of transactions a second, et cetera. It's unlikely to change. But that's kind of the point. But with the advent of vibe coding and the advent of AI coding tools, the ability for me as a leader, and again, Bitcoin has no messianic figure. I mean, Satoshi is anonymous, right? So you really can get out there and you can express desires and needs and development ideas for Bitcoin. The ability for us and for other players in the Bitcoin sector to welcome in these folks and say, hey, you're building a prediction market. You're building it on an L2 of an L1. There's some L1 and then that's got a foundation, and there's some L2 and then that's got a foundation or something. And you're like at the L3, right? And so if there's anything politically wrong or weird on the L2 or that L1, you may find yourself on a ghost ship. You've built your house upon sand, right? And so going to these folks and saying, what would incentivize you to build it upon stone, real foundation?
Yeah, that is a very interesting take too. And vibe coding blows my mind. The idea that English or any natural language is going to become a programming interface, that is bizarre, because then everyone, the way I look at it is you see these engineers at Google and other large tech firms making $1 million a year or whatever. Now the numbers have gotten truly crazy now. Meta's hiring these people. I heard someone got like $1 billion pay package or something in Meta stock. Like the guys that are best at building these AI tools are just in astronomical terms in terms of their compensation. But that is a signal to me that there's so much pent up demand for software engineering, right? Like everyone's got an imagination, an idea, and a thing they want to create. But we've had this bottleneck, which was the actual engineering talent. And so if vibe coding turns English or natural language into a software programming interface, well then are we just going to unleash the human imagination at scale? Like talk about a Cambrian explosion. We're going to have a Cambrian explosion of software applications.
So I think there's 3 Cambrian explosions happening, right? One is the AI coding tools, right? The other is the institutional adoption of Bitcoin. But the third, which is somewhat uncorrelated, but was spurred by the AI thing, is that the idea of what a max salary is has we've blown the ceiling off that one. And you can thank Zuckerberg for doing that, right? Where in a way, it is almost as if we had salary caps. Now, this was not true for some very high-end CEOs. This is not true for certain athletes in certain sports where you could give them some insane pay package, right? But the salary cap was, and this wasn't designed by the government of the United States. There's no maximum salary according to the law, but it was a social and a political thing where going to your head of HR or your recruiter and saying, we're going to pay this coder, we're going to pay her $300 million. We're going to pay her $1 billion pay package. It just politically getting that past your board, getting that through the organization.
Yeah.
Well, what will the chief legal officer think? And what will the commercial guy think, right?
A lot of envy, a lot of,
And what that actually did was that was an artificial constraint on human innovation because you couldn't be all you could be at that maximum cap, right? And I really actually do think I'd give Zuckerberg some credit from a wages perspective. Now we'll see. Again, don't praise the day until the evening. We'll see if it pays out. Maybe this was frivolous, and maybe he's overpaying for talent.
Yeah.
But I think the Overton window of what is an acceptable amount to pay somebody is actually more capitalist than it was 5 years ago.
Yeah, that's a great point. And it's another aspect of the productivity gains getting unlocked, right? Like these things are just so tremendous in their ability to add real value to an economy that the people that specialize in it at the tippity top get paid absurd amounts of money.
Of course, and as the quote says, if you show me incentives, I'll show you the outcome.
Yeah.
And these folks are very incentivized to do well.
So we should expect to see a lot more of that.
I think so. When the markets dictate it,
Yeah.
you should expect to see salaries that are now, assuming that you've got the political chops to get it past your people, and at least now it's in discussion.
Yeah, interesting. Stablecoins. You've already touched on them a little bit, but something you said offline to me was like there was something like, you didn't use this term, but I'll use this term. You could use whichever one you like. Something like a gateway drug into Bitcoin. And obviously Tether has become this crazily valuable company and with a very simplistic business model. Yeah. Sort of a digital central bank in a way without all the war and coercion. What's going on with stablecoins and how is this, obviously there's people with a lot of demand abroad for dollars that haven't had access to them. Is this the onboarding mechanism for, getting people digital dollars and then eventually they end up at Bitcoin?
Yeah, I think there are two exciting things from the stablecoins, right? I think there's the political results and there's economic results, right? So politically, the Genius Act getting passed, and I give Bo Hines an enormous amount of credit and the whole team and executive branch and the president for really pushing this piece of policy forward. This is going to be a seminal piece of legislation. I mean, this is akin to some of those 1930s Securities Acts, right? That we effectively built Wall Street, for better or for worse, off of these Securities Acts, right? We needed that in the industry, right? At least for this one. Again, there's more legislation they want to pass, and I hope it gets through in a way that is the net accretive. But politically, this was a massive signal, right? Usually, jokingly, I would say governments are really good at doing two things, which is nothing and overreacting. And I think for one of the rare occasions, this was a time where they actually threaded the needle, and there wasn't an emergency. They crafted a piece of legislation, they whipped the votes, shepherded it through, and we're a better country for it, right? And the conversations I've had with policymakers and regulators at the local, state, and federal level, downstream of that getting passed, it's night and day, right? It's a signal from a law, and it's not an executive order; those are great too, but it was a law, it was codified, right? That really puts the United States in the forefront of this and brings talent back, right? So much talent from the United States, we were leaking. It was a brain drain. We were leaking crypto and blockchain innovators, financial innovators to other countries, to competitors, right? That piece of legislation, along with the executive orders and overall sea change in reception, has really brought the energy back to the United States. So I think first I would say that politically, this was great. And that includes for Bitcoin, right? Because if you can get the traditional financial world, the TradFi folks on board, or at least somewhat on board with the stable coins, it's a better day for the Bitcoin world as well, right? And then I think the second component, maybe to your bit about the gateway drug here, is the economic power, right? I think historically people have talked about Bitcoin or hyper-Bitcoinization, right? The day that the world flips over to a Bitcoin standard. It may happen. We'll see. Hopefully it would happen in a smooth way, but these things tend to be volatile. But I think what's also been an interesting discussion is hyper-dollarization. There were attempts by BRICS to make a currency. The Chinese were trying to get the RMB, some play in the Middle East, replace the petrodollar, get it in Africa. Currencies, state-backed currencies are power, or they're superpower, because at the end of the day, you can get what's called the exorbitant privilege, Or if you control the base currency, the reserve currency of the world, you can hit the printer really hard, right? Because you're exporting your dollars. It's a product.
Yeah.
Right? It's a product. So stable coins or stable dollars are a great product for the United States to export, right? It helps us with the Treasury market. It helps us with global demand. It makes our trading partners even potentially closer. Plus, it's actually just better and easier to use, right? There's a not just a legislative or a philosophical reason. There's a legitimate economic benefit to doing this. It's just faster, better, cheaper than the alternatives, right? So it's competing on its own merit. And yeah, I think that really enables a world in which we're able to get folks into the digital currency realm. And once they're there, it's a lot shorter commute into the Bitcoin world than it was before.
Right. Yeah, it's fast. So it could actually be vitalizing the dollar in the short run.
Yeah.
Right. You're able to satiate more of that demand for dollars that's overseas. It has been historically inaccessible for one reason or another. Fiat rails have all the inefficiencies and gatekeeping and blah, blah, blah. So good for the dollar in the short run, but then you get a bunch of people accustomed to using digital money. Yeah. And then at the bottom of that rabbit hole is Bitcoin's the only pure money. Everything else is, an illusion more or less. So then maybe in the long run, this could be setting up hyper-Bitcoinization.
I think it certainly is a move in that direction, right? Yeah. I think it's doing two things. It's setting up the possibility of hyper-Bitcoinization happening, maybe a little more likely than before, which is fantastic. But in the meantime, it's spurring enormous cryptocurrency innovation back here in the United States. So if hyper-Bitcoinization is inevitable or could be inevitable, but a lot of the talent and a lot of the innovation was overseas, that would be awful. I want to build American Bitcoin in America, right? I want to build it here. I want to have a decentralized national reserve of Bitcoin under our banner, our flag, our country, right? And I think that the stablecoin regulation passing gives us a chance in a hyper-Bitcoinization world that is great for the United States.
Interesting. What you said this offline too, talking about Bitcoin as a Kardashev type technology. Now people may or may not have heard of this. Correct me where I'm wrong, but it's like there's different levels to the Kardashev scale. At level, I don't know, was it level 1, you're harnessing the energy of your whole planet, 2, your whole star, 3, your whole solar system, et cetera. We talked at the very beginning of this conversation how Bitcoin significantly influences our relationship with energy broadly. How do you look at Bitcoin in terms of it being a Kardashev scale related technology?
I agree. I think this is our direct contribution to the economy. Right? Obviously, there is the monetary aspect of the Bitcoin, but the legible direct contribution, regardless of your view on Bitcoin and Bitcoin's place in the universe, right? We are buying energy and we are buying it in bulk and we are not going anywhere. And so what this does is this incentivizes, it's a market signal, this incentivizes more energy development, right? This incentivizes more rhetoric around abundance, right? In creating a world where electrons are cheap because we need cheap electrons, right? Sure. And if we can help spur the development of independent power, right? We're playing our incremental role in moving humanity up the Kardashev scale, right? Whether it's being the customer of first resort in securing letters of intent for small modular reactors. Hey, I would love some of that to my base. Stable power, can you do it cheap? I'd love some of that, right? Or being the customer of last resort for an old bankrupt wind farm or whatever that needs something to really put the juice back into the business model. We can be at both sides of that, right? And I think that's a very interesting role that is unique to mining and unique to Bitcoin. Is that if you think of the culture of Bitcoin miners, right? We believe we're at the forefront of fintech in many ways, right? This is the vanguard of the monetary system, right? What's cool is it also puts us somewhat at the vanguard of energy technology as well, right? So you're familiar with DARPA?
Of course.
Okay, so the Department of Energy has its own version of DARPA, right? And I was at their conference last year, right? And I'm a nerd. I love a geek. I love the ideas and the technologies, and I feel like I'm in the future, right? But now with Bitcoin, potentially me and my peers, we can be in the driver's seat of pushing forward those technologies, right? And going to the new innovative technologies and saying, hey, this is bankable, right? And I pay cash. I also pay Bitcoin, right? But I pay cash, and I believe in you because our culture is different from your traditional energy consumer. I use my prototypical example, right, is the fiberglass factory, very energy intensive, right? they're not going to the ARPA-E conference, right? Thinking about small modular reactors, SMRs.
And why is it? Is it because the direct relationship between energy and monetization in this case?
It is. I mean, to use an example of where we monetize energy in a very indirect way, right? If you sit in a coffee shop and you eat a blueberry muffin, okay, that is a very, very, very roundabout way to get the sunlight that was in the blueberry, and it's in the muffin, and you're at Starbucks and you buy the muffin and you eat it, right? It's a very, very long path to go from paying for the energy, basically, was what you're doing. We really shorten the value chain. Yeah. Right. And we show up with our servers, right, with our computers, the ASICs, and we're able to generate value and share in that value creation with our partners effectively immediately as an off-taker. It's very unique. And we also have the unique ability, right, or largely unique ability in that we can scale up and scale down. Right. So I live in Texas, right, and we had a big winter storm a few years ago. And one of the issues around this winter storm was it forced business interruption. Business interruption for that bakery is bad, but is not tens of millions of dollars bad. Business interruption for a semiconductor fab is tens of millions of dollars per day in losses, right? That is the last group you want to take offline.
Right.
Bitcoin mining is a little bit different, right? Where our ability to start and stop, I mean, I'd ideally love to keep my machines going, but we can also be the ones to put our hand up and dial back usage when the market forces are indicating someone needs to go offline, right? And this is something we do in a lot of states. We work on these energy programs, demand response, and we backstop. So on one hand, you could argue we're playing offense with energy technologies. We're out there, we're looking at nuclear, we're looking at some of these fascinating new research in solar. Battery stuff's interesting too. Geothermal, I mean, I'm very open to meeting with folks that have interesting ways to harness energy because we're going to move up the Kardashev scale together. But I'm also playing defense, where we have our existing energy infrastructure, right, which is in some cases a little bit rickety, right? And we can be there bolstering it, dialing up or dialing back as needed.
Interesting. That might be a little abstract for people, the Kardashev scale. Like, what does that mean when we say we're helping move humanity up the Kardashev scale?
Sure.
I don't know, pick your number of years out, but like, what does that world look like and how is it substantively different than the world we live in today?
Sure. So if I look at the ability of humanity to harness energy, right, you go back historically and it was just about getting more energy from the woolly mammoth you hunted than you spent trying to chase down the mammoth, right? That's a very primitive human relationship with energy, right? Over time, it's scaled. It really hit a phenomenal inflection point with the steam engine, right? And realizing that you could pump water out of coal mines to then mine more coal, which would power more pumps. You can see you kickstart this flywheel, right? And then we harness the atom with nuclear power, and et cetera, and fusion is in development, right? Where does this go? Well, at a certain point, these three uses of energy, which to me are Bitcoin, artificial intelligence, and robotics, you almost fold those back in on developing more energy. You see, you use Bitcoin to fund it, you use AI to think through the design, and then you use robotics to build it.
So what does that mean? The cost of energy then asymptotically approaches zero in the century ahead, or like what?
It's a great zero and infinity. I mean, it's your core input to everything. So
demand abundance goes to infinity.
Demand goes very high. It's supply. Eventually, you run into the sun, right? And so that's where, you run into these interesting dynamics, right? Where you make something cheaper. There's a paradox, the Jevons paradox, where something gets cheaper and you actually use more of it. Yeah. Right. And this is something where if you have an energy abundance mindset, right? If it's
or more expensive, you use more of it.
Yeah, correct. Yeah, it's more expensive, you use more, right? So the idea would be that with with energy, the more ways we can think to use energy, the more energy we use.
Yeah. And then it's just almost, it is incomprehensible, right? Yeah. Because then I guess we just start making a lot more people, or we go to the stars. Like, why are more visionary tech CEOs, I'm thinking of like the Elon Musk types, why are they not seizing onto this or not seeing the light of Bitcoin in confluence with all these other technologies that they're so
it's a really
bullish on?
So obviously Musk has signaled openness intermittently to Bitcoin as a currency. there's a sense I think that we're going to run and gun with the U.S. dollar until the day it blows out, right? I don't think you would find many billionaires that are super excited about other currencies because if inflation hurts you at 2, 3, 4, 5%, imagine having $1 billion. I mean, that is inflation's really hurting you. And again, if you own assets, you're a little bit blunted to inflation because the assets are priced in dollars, and so. Maybe they're able to outrun it a bit, and you've seen that with some of the performance of equities and the fixed income market's doing weird things, and so they're maybe not as pressed by the currency crises as the common man, right, as the everyday American. But to your point, I think there was an awakening, and you've seen various folks, a gentleman in Mexico, there's a few Europeans, you've seen folks signal more of an interest in this, mostly as an asset protection thing. Plus a feeling of not wanting to be left behind.
Yeah.
There's not that many Bitcoin. So if you want to own a whole Bitcoin, that is going to get increasingly harder.
Yeah. Is it? I was thinking about this earlier today, actually. Like money's often analogized to like economic water. It's like something we're all swimming in all the time, but we don't see it. It's not obvious. It's kind of hidden in plain sight. We think through it a lot, but we don't think about it so much. And so if something were invented that were disruptive to water, like no one would even see it coming. They'd be like, why is that even a thing? And in a way, obviously money's changed over time, but gold being foundational hasn't changed that much, right? Like any society that stumbled upon gold stuck with gold, basically. Like even today we use fiat, but the Fed still holds a lot of gold, right? And if you're going to settle a geopolitical dispute or an account, it's going to be settled in gold. So there's it's still geopolitical money, if I could use that term. And so is that the problem? Is like, we're just talking about such a fundamental disruption that it is just outside everyone's Overton window. So we're a bunch of Bitcoiners like banging this drum to a deaf audience.
It's an interesting way to frame it. I find that Bitcoin, I would say, is at the nexus of two of humanity's oldest technologies, which are money and religion. Okay.
Interesting.
And so you have currency, debt even predated currency, right? Graeber wrote about this. So you have currency, you've got money, you got some sort of gold nuggets, you had doubloons, you had money, right? But humanity also has a great desire to believe in something greater than themselves, right? And deeper truths. And what you find in Bitcoin is something that is an immutable ledger, true, anonymous founder, right? So it feels like less of a political project than it might be if there was a very overt leader, right? And you have that kind of that cult radicalization because, as you said, you go down the rabbit hole, and you realize in the case of the global economy, it's turtles all the way down, right? It's recursive, and dollars are getting printed out of nothing. And there's this one official once said, "There's infinite money in the Federal Reserve." Yeah. Well, I mean, there's infinite money in the. Oh, that doesn't sound very finite to me. So you get awakened. Right. And it's almost like when people, a lot of folks turn to spiritualism, religion, in moments of crises, right? When they have a life event or something they can't fully explain with their existing framework of the universe and the way the world ought to be, right? And they find faith, right? I find it not improbable that as people's faith in money is shaken, which happens, they will turn to Bitcoin in a similar way.
Because Bitcoin's unshakable.
Correct.
Yeah.
It's got a few very basic core tenets. It has something that creates value for you, right? It's a product you want. No one can take it from you. Kind of like faith, right? And so I find that unfortunately, people turn to faith often in times of hardship.
Yeah.
People will probably turn to Bitcoin as a currency in times of hardship.
Yeah. No, I say this something similar, right? That we often say pain is information, right? It's the thing that causes you to put yourself into a new formation. And so most people, myself included, tend to learn a lot of things the hard way. Yeah. No matter how many, accounts you've heard from other people or books you've read about it. Like sometimes you just got to go and touch that hot stove for yourself.
You
to
do.
know what's going on.
Learn it firsthand.
And Bitcoin, that's an interesting one because we talk about this a lot. Bitcoin is the unity of opposites. And it's obviously religious in a sense, right? There's a belief system associated with any money. But Bitcoin is rooted in, mathematics, thermodynamics, Darwinian self-preservation, like these very hardcore scientific paradigms that we exist in. And somehow it's the both. It's like
best of both worlds. Again, it's Bitcoin is rules, not rulers, right?
So that's a good religion.
It's a good religion.
It's a good religion. Okay, good sir. I think I've kept you long enough. Any closing words of wisdom, or if not, please let people know where they can find you on the internet.
Sure. Look, I think this is a new asset class. It's a new category. And as folks decide how they want to gain exposure to the Bitcoin world, right, I suggest that they do look at American Bitcoin for a few reasons, right? Nice domestic American company trying to do the right thing by our nation, right? We've got a very compelling accumulation strategy that is based upon both a mining business, which is understandable, lemonade stand economics, if you will, as well as a treasury business. And we have the ultimate goal of accruing a fortress of a balance sheet, absolute fortress. No intention of selling, no intention of doing other coins. This is it for us, right? And that's a story that makes me excited, and I hope it makes other people excited too.
Fantastic. Well, thank you for a dynamite conversation.
Appreciate it. Thank you.
We lock our doors, we encrypt our hard drives, and we use strong passwords. But most people leave one thing wide open: their phone line. SIM swap attacks are one of the fastest growing methods of digital theft. In minutes, a hacker can clone your accounts, reset your passwords, and drain your life. Unfortunately, this is not science fiction. It happens every single day. Efani is the only mobile service protection designed exclusively to protect you from SIM swap attacks. Efani offers military-grade encryption on their product and offers up to $5 million of SIM swap insurance. And to date, there have been exactly 0 SIM swaps on any of Efani's over 50,000 protected accounts. So you don't need to live in fear, you just need to protect your weakest link. Go to efani.com/breedlove to secure your phone line today. Again, that's Efani, EFANI.com/breedlove. For the past 25 years, I've been reading roughly 1 book per week. Almost entirely difficult nonfiction books, the kind that really shift your thinking. Books on physics, money, power, psychology, spirituality, and philosophy. The real stuff. But I get it. Most people don't have time to read 50 books per year. So I hand-selected my favorite nonfiction books and distilled each one of them into a course that you can take in 50 to 100 times faster than it would take you to read the entire book. Each course gives you the key insights, mental models, and frameworks that matter. We launched with 15 book courses, and we are building toward a library of 100 by the end of year 1. So if you are a seeker of truth, wisdom, and personal growth, then my book course is for you. To sign up, go to course.breedlove.io. Again, that's course.breedlove.io. Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money. And be sure to subscribe to this channel to stay connected.